Welcome to the fourth Student Loans Update mini webinar. It's on October 20th, 2023. We have a lot to go over today, so I'm going to go ahead and get through these slides. My name is Andrea Pellegrini, and I run the Student Money Management Center for the entire University of Illinois system. And I'm joined today by my colleague, Nikki. Nikki, do you want to introduce yourself?
Sure. So my name is Nikki Jancola Shanks, and I am the policy director at the Division of Banking, which is within the Illinois Department of Financial and Professional Regulation.
Thank you so much, Nikki. So we're also going to launch a quick poll. If I can find where I put it. And we just get an idea of who's here today. That helps us kind of guide our discussion of specific things we plan to talk about in our examples. So getting an idea of kind of the age range and whether or not you're a current student or full-time employee or unemployed, especially since we're going to be talking about aspects of options for dealing with if you can't make a payment today. All right, we got some retired folks. All right, I'm going to go ahead and end the poll since there's fewer people joining us today. So thank you for sharing that. That also helps some of our colleagues that are part of the Get Savvy Grow Your Green Stuff webinar coordinating team maintain funding. So that helps us a lot, just knowing the demographics of who's joining us. We're going to talk about some options for if you can't pay now that payments have resumed as of this month. It's important to know if you can't make a payment, what your options are. We're going to explore some of the differences between deferment and forbearance, which is what we're going to focus on today. And then we're going to discuss some self-servicing options for managing loans because student loan servicers are a little bit backlogged right now. So the information that we are sharing today is current as of October 20th, 2023. Things could change while we're talking about this at noon Central Time. So just keep that in mind if you're viewing this recording later. Another poll that we want to launch here is if you can't afford your payments, what options do you have available? I did not set up a poll for this. So if you want to just put in the chat what you think your options are, can you skip a payment, apply for deferment, apply for forbearance, call your loan servicer, apply for income-driven repayment plan, which of these do you think you can do? And you can select multiple options. Thank you for sharing in the chat that this is a helpful webinar and you're helping another borrower through their repayment journey. It's very difficult. It takes a village in some cases.
In all cases.
It's such a confusing topic. Even before the last few years, it was confusing and it's just gotten more confusing. All right, so think about that. Think about what your options can be. We want to stress that you cannot skip, you should not be skipping payments. And we'll talk more about the consequences of non-payment in November. But there is a 12-month on-ramp to repayment that's referenced in the by student aid, and we can send out the chat questions or chat links along with this recording when it's made available. So that's something to keep in mind, that there is an on-ramp, but you want to avoid skipping payments. And now we're going to talk about the differences between deferment or forbearance, or more importantly, Nikki's going to talk about the differences between deferment and forbearance.
Yes. Hi. Sorry, I was also typing at the same time in the chat. So we're going to talk about the differences between these two things. We definitely want you guys to know the terminology. So if you need to request any of these from your servicers, you are aware of the differences and the wording to use when you talk to your servicers. All right, so first we're going to talk about deferment. All right, there are well, sorry, this is so if you need to, let's say you find yourself in a situation where you temporarily need to stop student loan payments for whatever reason. Maybe you lost a job, maybe you're struggling with payments, whatever it might be, and you're like, I need to try to temporarily stop this. There are two main types. There's deferment and forbearance. Within those, there are 8 types of deferment and 2 primary types of forbearance. We are going to briefly talk about all of those today. It is important to note, though, that deferment or forbearance is not available for every single type of loan or loan program. Another thing you need to be aware of is that interest may accrue during either of these times. So that means, yes, maybe you could temporarily stop your payments, but your interest is still going to continue to grow. So when you do start up again, your payments may be higher. You may owe interest up front. So you really want to be careful and make sure you understand the terms of what your servicer and you work out. There are very specific eligibility requirements for both of these. Again, we're going to give you an overview. And for no matter which type, you always must submit a request and documentation to your servicer. You can't just call up and say, I want this forbearance, bye. Like, you're going to have to provide documents and to show why you need it. All right, so we're going to talk about deferment first. This is the biggest. I am going to briefly talk about each of these. I'm going to start with the most prominent deferments. So the first is in-school deferment. So that is if you are enrolled at least half-time in an eligible college or career school, you do not need to make payments on your student loan. This type of deferment is often very automatic. If you're still in school, you're in an in-school deferment. The graduate fellowship deferment is if you are in a doctoral or master's degree level fellowship. This could even include things like a residency for if you're pursuing your medicine doctorate degree, et cetera. So it's kind of like the in-school deferment, but it's for higher levels of higher ed. There's also the parent plus borrower deferment. Again, kind of like the in-school deferment, if you are a parent plus borrower and the student that you have taken this loan out for is currently in school at least half time, you as well can receive a deferment. Then there's the economic hardship deferment. If you are very low income, if you are receiving public benefits, so if you are receiving SNAP or any sort of government assistance program like that, that is something that you can apply for under economic hardship. Also, if you are serving in the Peace Corps, you could apply for this one. There's also an unemployment deferment. So this is if you are currently seeking and you cannot find full-time employment and therefore you cannot make your payments, you can call up your servicer and explain that situation to them. Then these next 3 that I'm going to briefly talk about are not as common just due to what they deal with. So the first would be military service and post-active student deferment. If you are in active duty, you can request not to pay your student loans. Or if you are 13 months post active duty as well. Then there's the cancer treatment deferment. So if, unfortunately you're struck with cancer and you have to undergo cancer treatments, you can defer your payments and for up to 6 months after your treatment ends. And then rehabilitation training deferment. This is if you're enrolled in an approved rehab program, you can also request a deferment. And so deferments, again, we just really want to stress that this does not mean that, yes, you may not have to make your payment, but there's a very good chance that your interest is still accruing. So if you call your servicer to talk about any types of deferment, just make sure you understand what is actually happening to your account during that time and your balances. All right, so types of forbearance, this is a little bit more straightforward. There's not as many types. So I'm going to talk first, and we wish that everybody used the same terminology for forbearance. However, that does not seem to be the case. So that's why we have the names of them, and then also in parentheses, what you also may hear a servicer or somebody refer to it as. So there is the general or discretionary type of forbearance. This is completely up to your loan servicer to decide if you qualify for this. You can call up and request it if you are unable to pay for a whole host of reasons, the change in employment, financial difficulties, whatever you have the right to call up and ask. And the duration that is usually granted, if the servicer grants it, is 12 months, so a year. After that, you can request another forbearance. However, there is a limit of 3 years cumulative. So if you ask for a forbearance for 6 months 1 year, then you pay for 6 months and then 6 months the other year, it's all going to add up together that you cannot ask for that discretionary forbearance more than a cumulative of 3 years. Right. So then there's the mandatory or administrative forbearance. All right. So if you are eligible, the servicer is required to grant forbearance. So the discretionary general one, that's up to the servicer depending on the situations. These are ones that they are required to grant you. So the first, so if you could call up and request a mandatory or administrative forbearance if you fit any of these qualities. If your federal student loan payments are 20% or more of your monthly gross income, then the student loan debt burden forbearance is available to you. Again, as we said it at the very beginning, it's not necessarily available for all loan types. For this one, it's direct, FFEL, and Perkins loans. Likewise, if you are in AmeriCorps, if you are doing a residency for either medical or dental, you are part of the Department of Defense Student Loan Repayment Program, the National Guard duty, or teacher loan forgiveness, you could only apply for this if you have a direct or FFEL loan. So that's the mandatory forbearance. Just to give you guys a quick little side, that is why with COVID-19, the payment pause, they often refer to it as an administrative forbearance or a mandatory forbearance because it came from the White House during both the Trump and Biden administrations. So it was mandatory. Nobody had to do anything. They didn't have to call up. The servicers had to comply. So That likewise, if you fall into any of these categories and you call up your servicer, they will have to grant those to you. So, um, just to highlight again for the durations, no matter what type of forbearance you have, it can be for up to 12 months at a time, but it cannot be renewed for more than a cumulative of 3 years. And then just kind of a quick overview. This is a slide that compares the two. So for deferment, that is the period of which repayment for your principal and your interest is temporarily delayed. Okay. Um, your loan servicer may grant you a forbearance if you can't make your scheduled loan payments, but you don't qualify for a deferment. Deferment, you need to, again, have certain qualifications that you meet, but maybe they could grant you a forbearance. You can always call up your servicer and try. If you don't fit into some of the specific categories that we talked about today, you could call and ask for a discretionary forbearance. The worst thing that they're ever going to say is no. So, and we are going to also put a link to that where you can learn a little bit more about forbearance request process. Because again, these things, you call your servicer and you may ask and have this conversation, but a conversation is not going to be enough. You're going to have to fill out some paperwork for this as well. And again, I just really want to highlight that if you call for either of these two types of programs, deferment or forbearance, you really make sure you understand if you choose to take this payment stop, right? That you understand what's happening to your interest and your principal balance while you are in deferment and forbearance. The last thing we would want is for you guys to call up and request something and not realize that you're going to owe, that your interest is going to capitalize or your balance is going, whatever it might be. So just make sure that you are asking those questions.
All right, so I'm going to talk about some of the self-servicing options. We kind of premised this earlier that you might want to self-service on things that you can because call times are very high right now. All right, so typically you want to work with your loan servicer to make payments on your loans, request changes to your payment plan, like enroll in an income-driven repayment plan, to apply for student loan forgiveness. This includes like public service loan forgiveness, teacher loan forgiveness, to apply for loan cancellation. For instance, maybe you have been making income-based repayment payments for X amount of years and you still owe a balance at the end of the 20-year term that typically covers. And so you want to apply for loan cancellation since you're eligible for it after 20 years of payments for income-based repayment. You might also want to request deferment or forbearance. You have to work with your loan servicer to do that. Or to discharge your loans due to permanent disability. You have to work with your loan servicer. So as we talked about earlier, and we keep stressing, if you do need to contact your loan servicer, remember that call times are very high right now, and they are expected to continue to be high for the foreseeable future at this point. So some of our colleagues from Southern New Hampshire University, Student Connections, and University of Phoenix created a federal loan servicer matrix to help us identify which self-servicing options are available through each servicer's website portals. So we're going to put the whole thing in the chat, the link to the whole document, but this is just a portion of that matrix. So you get an idea of what your options are. So for most of the listed. So Mohila, Nelnet, Aidvantage, and Ed Financial, some of the biggest servicers, you can do a lot of stuff online through the borrower portal. So you can set up payments, you can access troubleshooting options, you can see what your payment amount is or your due date. You can update your contact information, which you can also do through the Federal Student Aid dashboard, which we've talked about in previous webinars. You can also look at your traditional payment plans, like your standard or graduated payment plans. You can also apply for unemployment deferment or economic hardship deferment through those portals. You can apply for forbearance. The only servicer that allows upload and sending of documents and uploading of public service loan forgiveness forms is Mohila, but they're also the only ones that are servicing student loans that are on track to do public service loan forgiveness. If you're applying for public service loan forgiveness, you will get transferred to Mohila. All of them have the public service loan forgiveness payment tracker. And like I said earlier, the option to make a payment. So that's something to keep in mind. If those are the types of things that you're looking to contact a servicer about, is try to do it online first before you try calling them, because wait times can be several minutes to several hours, depending on what's going on at a certain time. So it's also important to remember that loan servicers have changed multiple times over the past 3 to 4 years. Currently, the Federal Student Aid website lists these 6. So Aidvantage, Default Resolution Group, ECSI, Ed Financial, Mohila, and Nelnet. So watch out for transfers. They could still be transferring loans around. If you went to different schools, you may have loans that go to different servicers. They try to keep all of your loans that have been distributed throughout your academic tenure to the same servicer, but that's not always the case. All right, so another thing to keep in mind is if you sign up for automatic payments, it can save you 0.25% on your interest rate. The payments are also drafted from your bank account using your routing and account numbers, not your debit or credit card. That's often confusing, especially for younger borrowers. And then you also want to make sure, if you're going to be using automatic payments, that you have sufficient funds for that payment amount by the due date each month, or whenever you're having the auto withdrawal scheduled. So keep that in mind if you're looking for a way to lower your interest rate. It's not a lot, but it does add up over time. So if you're in a situation where you don't qualify for deferment or forbearance, and you're still struggling with payments, you may need to look for opportunities to decrease in expenses or increase income. During the past few years, there was a lot going on with student loans, and it was kind of hard to make financial decisions without a concrete understanding of what was going to happen with student loans. For example, many of us thought that there would be at least a partial federal student loan forgiveness, and you may have financed a car or taken out a mortgage counting on that, and it didn't end up happening. So we're going to share some educational materials that may be able to help you explore different ways to reprioritize your budget. So we'll drop that in the chat here in a couple of minutes, and then we'll also send it out along with the recording so that you can have access to it. Just a few action items, because we like to close with action items for these webinars. Remember, if you can't pay, to explore deferment or forbearance options on your borrower portal or your servicer's website. Kind of see what their process is. It can all be slightly different, so we don't want to tell you something and it ends up being wrong. If you want to lower payments, you might want to look at the loan simulator and apply for income-driven repayment. If you want a discount on your interest, set up automatic debit or ACH payments, with your servicer, so you can take advantage of that benefit. And then obviously you can stay in contact with IDFPR and University of Illinois system. We are working with several other collaborators on the larger Get Savvy Grow Your Green Stuff webinar series. This is a sub-series of that overarching series. But we'll also stick around if you have any questions right now. For now, I'm going to shut off the recording, but I will make it available for anyone that wants it and has registered.